Hello, how to read trend lines for for stock entries, swing trading, daily chart analysis. We are going to use two stocks here to do that. The first one is going to be NVR. The platform we are using is Thinkorswim, and we are going to use maximum daily chart for the chart analysis, NVR. And NVR is highlighted on our watch list because we purchased it and we have not sold it yet. So the trend lines, here we have two that we change the color for. The default color is that one, so we change it because we are going to buy it at either one of those lines. So having long uptrend lines passing by by the higher lows of the chart, because those are large stock, they are upward stock. So upward, going up, you trace your support line passing by the valley of the mountain that the chart is drawing. Those are the trend lines that we are going to use for our entry point. And with this long uptrend line swing trading strategy, you will pick the trend lines that you notice that the stocks is touching base with on a regular basis. This one, it didn't touch base with it recently much, but must have done it in the past. And this one, it touched base with it more. Therefore, we have those two selected. So in 2024, we purchased it using short uptrend line swing trading strategy, and the arrows pointing up shows where we bought them, and the arrows pointing down shows where we sold. But in 2025, instead of trading each swing, using short uptrend line swing trading strategy, we prefer to use long uptrend line swing trading strategy. The year and the date are on the x-axis, and the price is on the y-axis. So 2025 is here, 2024 is within those two dotted lines here, and so forth. So using long uptrend line swing trading strategy, we trace our trend lines which cross multiple years, in contrast to the one we used in 2024, which passed by the higher lows of just one side of that mountain. For instance, this one passed by the valley of the mountain. So, and we pick the one that is most likely touch base with, because we purchased it in 2024 using that short uptrend line swing trading strategy. We purchased it again, and then it went up a little bit, reached a new high, and from that point it was down, going up, and then start going down. So when it touched base with this trend line, we purchase it again. Once it start going up from there, we purchase it again. So those are your entry points. So tracing the trend lines is good to start with maximum monthly chart, so that you can see multiple years on the screen, or having the chart cramped together across multiple years, so that you can see the pattern and trace the line passing by the lows. So you'll trace it, and we have some videos on how to create your watch list. We show the process in some of those videos, but you'll just trace and see. If I trace it from here, it will cross this one and go this way, and you'll just keep tracing it to see which one will get closer to where the price is. And once you are done there, you'll go to your maximum daily chart and color code the lines that you think it touch base with, often that you think it might touch base with. and choose those lines to be where you want to buy it. Those are your entry point. That's how you spot the entry point into the trade. And you'll just analyze the stocks on a daily basis also, if you can, to see where the price is in comparison to where you want to buy. And once you reach the line, and you'll start paying attention to it to see if it's making higher lows. You can see here, even the day that I purchased it, by the end of the day, we still have that green bar there. Okay, so you can see that there is an uptrend here. So this red bar is higher than this one, which is higher than this one. So you want to compare red bar between the green bars. And like yesterday, we are doing the analysis. Today, September 19, 2025, analyzing the chart after the market closed yesterday, September 18. So you want to do the analysis after the market closed or before the market opened. So, and yesterday the price went down. That's why the price is highlighted in red. That just means at the end of the day, the price was lower than the price in the morning when the markets open. So, and you compare, those red bar, those are the pullbacks, and see if it's getting higher and higher. After the price goes up and pull back, you'll compare those pullback to the previous pullback to see if it's going higher. And once you have a few higher lows, you can buy it at the first green or second green bar that follow a higher pullback to get in. You just want a confirmation that it's down, going down. Even so, it could still go down. For instance, we purchased it there, but guess what? It pulled back down a little bit, continue lower before it start going up again. So we got it in, but technically on this purchase, we remain negative on it, maybe up to this area, and then those are higher up, because when I put my mouse here, you can see the price that the mouse is pointing at and where the price is right now. So we are positive, we are profitable on this purchase, but we are still negative on this one. So let's say you do not have these stocks and you like to buy. That is how you will do it. So we are going to trace our trend lines here, and I don't like to trace it. You see how it crossed those? Therefore, I'm going to get out of that. I'm going to try to do it this way. We'll start with that red bar, and we'll just try to get to where it is right now. So there is an uptrend there. It's going up. However, where it is right now, it is lower than this one. So if you have not purchased these stocks yet, like you never purchased it before, for instance, I won't suggest you buy it now, because again, this red, even though we have an uptrend line here, this red bar is lower than this one. Therefore, I don't know if we wanted to go a little bit lower. So therefore, I would prefer you, let's say today is a green bar, still I'll prefer you wait next week to continue checking it. That green bar, if you have another green bar, that's okay, but you are looking for the red bar. So the next red bar, you will pay attention to it compared to this one, and then you'll wait for a green bar. So that red bar, because you will have a green bar before you can say that last red bar, you can compare it to this one. For instance, you can see that here we have multiple red bar. Let's say you have the first one and you are comparing it to this one, is higher up. But guess what? The following day the next day you have another red bar. So you want to see a green bar before you know that this pullback ended. And then you can compare the last red bar to the previous red bar that was before a green bar, if that makes sense. That's the way I do the analysis. So you pretty much is like start over. Like here, you wanted to see a higher lows. That means you want a red bar that is higher than this one before you can buy at a green bar that will follow that red bar that you are comparing to this red bar. Does that make sense? So, and that is what I would recommend you do. That way you don't buy it and then it will continue going down. It's going to go up at some point. You are just trying to minimize the risk of staying in the trade trap in it while it's still going down before it's ready to go up. Like for instance, buying it here, I'll remain in it here negative from March to May. So that's 2 months that it was positive here. It was positive here as well. But there were times that, you know, for most part, I was negative in it for 2 months or so before it start going up. So, but purchasing one here in October 2024, 2 months being negative here is not a problem for me. Does that make sense? But I have experienced buying these stocks already, and I know that any price that I pay here is still going to be lower than this one. And I know that at some point it's going to go up because it's a large cap stocks that the company has been around for years. It's not going to bankrupt on me anytime soon. I'm okay. Just seeing that indication that it start going up, I bought it. It's not that you are going to buy exactly at the line. When it's going down, it's going to be making lower lows, touching base with it, maybe going below it. Once it start going up, you will start looking for higher lows, and after a few of them, you will buy. But keep in mind, it can turn around and come back again before. So those are things to watch out for. And when you have two lines like that, you don't know for sure if it will try to come down to this one. Therefore, you'll have to take that into consideration and be okay buying there, and maybe say to yourself that if it does not go up from there, touch base with this one, maybe you might buy some more before it start going up. All of that are decisions you have to make based on the stock you are trading. But having multiple years in front of you gives you an advantage to see the pattern, a bigger pattern of the chart, to actually analyze to see what is going on. Having it like that, you know that it reached a peak, the highest peak that he wanted to reach during this claiming, and is going down. If you are using a shorter like 1 year daily chart or 3 month daily chart, you'll be looking at something like this that I just zoomed though, but you'll be looking at something like this that may not give you a bigger picture of what is going on. If I do 1 year daily chart, you are going to see 1 year time frame here, but still it's too close that even if we do 3 months, you can see 3 months here. It's just very close to you that you may not know exactly what is going on with, if you are using large cap, if you are using long option swing trading strategy. Using short option swing trading strategy, those short term time frame might be useful if you do not want to keep zooming to see what is going on there. It will be useful, and that's what I used last year. 1 year time frame or so, I use this one to trace, and then I will use 1 year time frame to 1 year daily chart to be able to see the bar properly and see what is going on. But using long option line swing trading strategy, I want a bigger picture of what is going on when I'm making my buying decision. And when it reach that line and start going up, then I can zoom closely to see what is going on there. And yeah. So but other than that, to do the chart analysis on a daily basis, they pretty much the chart like this is what you are looking for, and you can just see, yes, where is the price right now, where is the trend line you want to buy it at. Is it at that trend line and start going up from there? If so, are you having higher lows? If so, how many did you have so far? After you notice lower lows from that point, how many did you have? How the price was yesterday compared to today? If today is a good buy, are you going to buy? You make those decisions once the stock is at the trend line that you like to buy at. Until then, you just compare where the price is to where you want to buy. And if you already purchased it, then you compare where the price is to where you want to sell it, which will be the next high. But then when it's getting close to that point, you'll compare the previous high, which started somewhere here, and pull back, went up, pull back. So pretty much leaning on the upside wall of the mountain and makes that higher highs quite a bit before it was done and start going down. Although time to times it will pull sharply to that support line to rest and then go, because it's supporting that mountain side of the wall. It's going to have a support line for it. So when you reach that exit point, you can decide to stay longer in the trade while it's making higher highs, pulling back, making higher highs, pulling back, and so forth for a while, and then you can sell it to lock in some profit. It's not about making the most profit that is there to make. It's about making a good amount of profit that you are comfortable with. So, and for this one, for instance, again, the price is higher. Just keep that in mind. If you're starting out, you are not going to spend, you are not going to buy a stock that is this expensive. You can start with stocks that is around $100 or less and go from there. So, but again, let's say this one is what we bought it at 7,000, let's just say 7,300. Right now is 8,171. So you can see the difference. Even for one share, the profit that is there to make. So 7,300 and 8,100, and that is just one share right there. Alternatively though, if you take this one here that I paid 9,500 to 8,100, is about what, 600 negative there, right there on one share as well. So yeah, but let's go to the next one. The next one is ORLY. So ORLY is going up. I like this chart. And we have this one, which is, it didn't touch base with it recently, but we have this one clean chart, if I say so myself, compared to the one we just came back from. But touch base with it here in 2024 and has not come back to it yet. So it's going up, making higher highs. So yesterday the price dropped, but again, it's far from where we want to buy. Therefore, there is nothing here we are going to do to this one, and then we'll move to the next one. That's how you do your analysis. You see, very quickly, this one we didn't do anything with it because it's so far from the trend line we like to enter the trade that we are just going to look at it to see how it did yesterday, how it's doing in overall, where it is on its trajectory, and compared to the value line is still climbing up. So therefore, we are not going to do anything to this one. So that is how you do your daily chart analysis, and that is how you read the trend lines for your stock entries. Thank you so much for your time. We thank you very much for watching our videos, and we thank you very much for all your comments. We thank you very much, you all that subscribe to our channel. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel and in sub.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to save money. Just start small and go from there. You can just buy one share of a stock that you are interested in and try the strategy you are using and just aim for $1 profit. When I say $1 profit, does not mean when you have $1 profit you will sell it. No, it is the target you have after you pay all the fees. But you are trying the strategy you will stick to from when you buy to when you sell, and then you can see the profit you make from that strategy. The goal is $1 minimum after you pay the fee, the brokerage fee from trading. But guess what? With this long option and insurance strategy, you are going to make more than $1 because you are buying it at the valley and you are selling it at the peak of the mountain. For the time frame that you are staying in the trade, will play at your advantage to the point that you are going to make more than $1 a profit, even on one share. I just show you the profit for NVR, for instance, and trading large cap stocks, upward stocks. Those stocks, because they are expensive, you'll find some less than $100 and some more than $100, some around $100, and you just saw those two. The price is, the different ORLY is around $100. At the trend line is going to be lower than that, and you can see last time it touched base with it was 63. It's at 100. Even if you sell it when it was around somewhere here, 63, let's just say 60 and 100, that's $40 profit on one share, and you target $1 profit after you pay your fees to the broker, and that's $40 profit right there. And you'll have hold on to it for more than a year, from May to September now, and you'll make $40 profit. And $40 divided by 60, let's say you bought it at 60, you sold it at 100, so that is 66% for that time frame, for a year and a half that you hold on to it. So that is the strategy we are using. That is the strategy I'm using, and that is what I'm sharing with you. It does not mean that's the only strategy out there or that is the best strategy out there. I don't really like to use the best in my tarots because, again, personally, I feel like it's subjective, it's personal opinion. So this strategy is the best for me based on my risk tolerance and my personality type. I don't take a lot of risk. I'll take some risks, but not a lot of it. And I have a job, full-time job, using long option line trading strategy. I'm not going to trade often, and I'm not going to buy often. I'm not going to sell often. Therefore, I'll be able to track, record those trades. I'll be able to manage those. And when it comes to tax, I file our own tax returns. I won't have a lot of stocks to deal with, in those 1099 forms. So, but again, that is why you tailor your strategy, you customize it to fit who you are. Thank you so much for your time, and therefore I just prefer to shy away from using the best on those, because again, it's personal opinion, and I'm not trying to to have the best strategy or to have the most profit. Therefore, I'm not teaching you those either. A good strategy that I like and a good profit that I'm comfortable with, happy with, is what I'm targeting, so that I don't stay in the trade too long until it's done and then start going down, and then I will be negative in it. So but all of those you improve as you progress. So I won't say it's the best strategy, because there is room for improvement. Again, that's why you customize your strategy. As you keep practicing it, you'll keep customizing it, and you'll find stocks that are working well with your strategy, and you'll have your watch list of those stocks. But buy one stocks, and with that strategy allows you to stretch your money, so that you have money in the account to be able to buy more stocks from your watch list, to see which ones are working well with your strategy. Because with this long optional swing trading strategy, though, you are having inventory of stocks in your portfolio, therefore your money is in those stocks. You are going to keep adding money to the account. Like right now, I don't have money in the account to buy more stocks, because we have now put money in the account for a while for some expenses around the house that we need to focus on. Therefore, we do not have money in the account to buy more stocks. I'm now using margin, so we need to put more money in the account, because stocks that are purchased that are positive, I don't want to sell them yet, because they are positive and I know there is room for them to continue going up. And there are stocks that are negative as well that I'm not going to sell at a loss, because I know at some point they will turn around and go up. So when you are using long option and swing trading strategy, you will inventorize stocks. Therefore, your capital will be trapped in them, and you will continue adding more money. So it's okay when you start trading to buy small number of shares. That's what I'm saying. One share, $1 profit. That way you can stretch your dollar across the list that you have of those stocks, to see which one are working well with your strategy, and which one that are now working well with your strategy, so that after you sold those, you can take them out of your list. And until you curate your list up to a point that over time you'll have a list of stocks that work well with your customized strategy. From that point, to increase your profit per trade, you just buy more share, and at that point you'll have enough money in your account from your own capital that you are from your own paycheck that you are putting in the account, and from the profit that you are generating from those trades as well. Your account will grow over time. And yes, you'll continue saving from your paycheck and putting in it, because that is the money that is working for you. We do not borrow money from the broker to trade. We do not use margin, even though the account qualify for it. I don't use margin. They say the margin is 12%. I don't know what that means. Is it 12% per year, 12% per trade? I don't know. So we just save our own money and then use it to trade. For more of stock related videos, will you please check the playlist in the description of this video. Thank you.